Hi, everybody. This is Phillip Guan, CPA, and welcome to the classes for us to teaching how to do tax return class number 5. So we have some technical issue, so that's delay. I'm so sorry. So let's get started. Now, first, I am going to make sure you guys can hear what I say. And Victor, can you hear me?
Yes. Good evening, Philip.
Okay, wonderful. I'm going to share my screen. I have been recording, so I hope this time works. Okay. Now. Okay. You are seeing my screen right now. As you can see. Now, in here, I am right in the middle, okay? So you see my face right there. So now we have this client, and the taxpayer is called Northeast, and the social is 400006005. So now we're gonna get start all over from here. Let's say open. Okay, I may have to do everything. Okay, okay. 400006005. Now, this time, because in this, I do not have an input, so therefore, I need to do all over. Now let's see. It doesn't let me. It doesn't let me. I want to split the screen so that way I could be able to. It doesn't. Okay, good. It should be able to do just the screen on this side. So that way we can side by side. Verify Johnny. So now, November 25th is the birthday, okay? There's a phone number. Try to copy and paste this. It's a cell phone. And the social, the spouse. The birthday is, they have the same birthday. Now, in here, all you need to do is put the zip code. And they go to public. But what I'm going to do is I'm going to change it to 414 my zip code. So change it to California so that I can also teach you to California. So I'm going to change everything to California. But this one automatically go to California. So this one is the personal information, like the firm, the taxpayer, ERO. Okay. Now, this one is verified jointly. We have been learning. And then if you have some question, you plus F1. Now, the second thing in here is an ID. Now, the ID that gave it to you, information that should be in here is the question. I changed it to California. No.
We can have a place for the ground to go into.
And then at the second one, obvious is not the real ID number. We just make it for illustration purpose. Now you make sure you have a not expired. So you make sure you have those ID. If not, you should have those photo identity information. Okay. Now, husband and wife, there's one dependent. So there are total of 3 people. Now in here, if you want to double click in here, sometimes you can use the internal calculator to help you to do a calculation. Pretty cool, huh? Now, we don't use this one right now. We may use it in the futures. Okay, so this depending on others, as well as all other total 4 checkboxes is not applied in this situation. Okay. So what else we need to answer? There's 2 places we need to answer. I'm going to quiz you. Who know how to? What else I need to answer in this screen box? I need to have to answer 2 questions. Who know the answers? The answers here, like here, and here. The first question is they don't have a foreign asset more than 10,000. Foreign bank account more than 10,000. The second is they do not have virtual currency happen to be in this situation. If there's a yes, then you need to report it. If they do have foreign asset, more you need to report it like 10,000 plus bank account, and then you need to come here. If you check the no in here, you don't need to answer those questions. So now, I'm going to, from here, this screen so far, we fill out. We normally need to fill out this from the 2020 tax return for the total tax for federal and California. And they also have health insurance in here. I will check this little box in here. It's not significant for now for the further because there's no penalty anymore. But let's just do it. Now the next question is there's a dependent right here. Number 2, we double click it from here. So west east. West east so it's 400221212. It is a daughter. The birthday is November 25th. And in this illustration, say the whole family have the same birthday, November 25th. It's possible, but it's not happen often. So we change it for state of California. Now, first question is yes, second question is no. We skip those 2 questions, and then this is yes, 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 and yes. And it was a little girl, 2 years old by December 31st of 2021. We're using 21 tax software to do practice right now. We will use a 2022 to do the coming tax year. Okay, now, like there. Let me see. There is a child care. So, child care information right there. This means their child care information. Okay, now we need to input the child care amount. You click in here. You can double click one more time in here, right click, and you hit the calculator. 450 times 12, enter. You see there. So you need to do this. Clear, auto clear, when X. So we put this one. They carry over the previous number. Times 12. It's right. And then you can hit escape. Now in here, we also go to 2441. Say yes for the first question. Now, this is the EIN number from this child care. Is this one. They did not say it's EIN or not, but it looks like it's a child care center. And most likely it's an EIN number. Let's assume it is. Now, Hi-Fi daycare. Hi-Fi daycare. Sometimes there's a limitation of the space. So you cannot put it in. That's fine. Or sometimes you can do it like this. That works fine. Find rainbow. Land. And they use Chicago, I use San Fran. I just change it. So you remember that amount? You cannot remember. It was 540, right? If you want to double check one more time, that should be equal to the same. Double click, click, right click, 450 times 12, enter. So sometimes they may have switch daycare, so that way they may have 2 daycare, but add together should be the same, as 5,400. Now in this situation, there is a phone number. They supposed to have a phone number. let's say. Just make it up. So now, escape. We finish this one, escape one more time, escape. Now we go to here. Ours is to input the wages, right? So here is the there's W2. There are two W2. So the first W2 belong to North East. North is taxpayer. The EIN of that is 3 NIMB. I also change it to that's not necessary. I'm just saying I can do this. Still 760, but it's different equal. I just make it up these numbers. So now we've coded 7125. So now in this situation, 1, 3, and 5, they're the same. Not necessarily all the case like this. In this situation, that means they don't have 401k and other things in here. So I put it in for state of California. State of California normally have a state of California number in here. Let's say they do have 2,000 for state of California tax. And there is state of California, there's one more, it's called California SDI. It's more than 1%. I just make it in here. It's 1 plus percent, 1.2 or 1.1. Yeah, in here. So now the second, you go to the spouse, S, stand for spouse. EIN 9. The name of the company, OH, HICS, 1400, F, PROOF. Okay. I also make it as sentence address. In this example, box 1, 3, and 5, they're the same in here. So now I also make it for state of California. So let's say they also have 800 of state of California tax. And they also have California SDI. Now, we finish those two. There is an unemployment for Northeast. Now, unemployment is 1099G, G like George right here. Seven. Now, this is each and every state. The unemployment department, the name is a little bit different. For state of California, it's EDD. For Illinois, is named as Employment Security Division. Okay. Because I am going to change it for state of California, so I change it to EDD. Now, Obviously, there's an EDD street, but I'm just make it up in here. Unemployment information. They also withholding a little bit further. Withholding in box 4, like that. So in here, you need to put state of California number. If they're the same, you don't need to input. You don't have to input this. If there's any withholding, you put in. In this situation, does not. So you make sure you put in the right persons. If this person is the taxpayer, North is right here. There's a social, and for you to identify. And normally they put the last 4 of the social. So now we finish this one. Especially when you split the screen, so you click on the screen that you want to do something about it, and then escape. So we finish this. Now they have been paying estimate tax. Now estimate tax like here. They are paying estimate tax $500 each quarter. That's what I mean. Okay. They did not pay estimate tax for state. Now in here, we haven't finished yet. So we still have more thing to do. So since they do estimate in last year, you're more likely to do estimate in the coming year, like this. Now, we have one more thing need to be done, which is a new thing, is the rental property. So far, we have been working on the first tab, general. Now, we move on the second tab, income. From the income, there are many choices. In the left column, about the bottom, near the bottom, right here, there's an E like elephant, rent and royalty income. Double click. From here, it's Johnny doing it. I make it all in state of California. Now, there is a duplex right here. That's what they're talking about right here. And this is all, everything I highlighted regarding this rental. So now, I normally like to put the first part of the address like this to identity. And I also normally like to put E1 like that to identify. And I copy this and put in a street first part of it. Now, normally the street doesn't have the E1, but when I do this way, when the client have more than one, it's easy to identify. Now, I make it also for state of California as well. Okay. So in this situation is the duplex. So the owner is occupy half of it. They rent another half. So in this situation, it's a 50% of this. It's net 50%. So now, in this situation, it's the multi-unit family resident, and then they happen to use half of it. Okay. If they spend more than 250 hours to manage this part of the property, include the agent, there will be yes, the qualified QBI, you get another 20% off. There's a new law start 2018. Let's say, assume they are qualified. It's based on their Fed qualified or not. Okay. They could also lump more than one rental property together for this qualification. By doing this way, they will put a one in here and then to connect both rental together for this purpose. So in here, there's one rental. So now, in here, this is the first part of it. And then on top, you can see another two tabs. There's an income. They are in blue on the very top. And you see it like you are seeing screen below that income and prior comparison. I did not have the prior information. I don't have any prior information. But normally, if you have a client to come in, you input the prior information in here so that the software will generate a comparison for you. And then to see the reasonableness of this year tax return, the numbers right, sounds right. So now income and expenses. Now, they rent 365 days. The rental income, they have that 50% part of it, there's no personal use. I'm talking about only the rental portion of it. They live in one part, they rent one part. The part they rent out is all rent. Is 3,000 per month, 36,000 per year. So they are actively manager. So as they are active manager, so we need to go back to right there. Check this little box. They say it like there. Using, that means they put in a lot of time. The problem may be the duplicate was in places in this year or no wonder. So this is the year they actually bought this houses and put in rental. So now on the second tab, income, in the left side, the rent, and go move to the right, you will see in the corner depreciation, and then the 4562 depreciation detail, double click. On top, you choose Schedule E. Do you remember I put in E1, and that's how you easy to identify. Especially when you have more than one rental, by doing this way is so cool. Look, you put in E1, and you put the address 725 Windy Avenue. Now, it is a building, BLD. Now, I changed to San Fran. Okay. So they put in now. The basic for the rental unit is 275. Oh. The rent value is 100K, like here. I put 100K. That's what they say in here. The base of the rental unit is 250K, not include 100K for rent. Now, what do we use? This, like there, like here. Use this. And you can put 27.5 in here. If you don't put this, it's already, once you choose this one, it's already there. Now, this is the very first year to put in it. So therefore, there's no prior depreciation. But if you pick up a client, have a previous year rental, you need to put in the prior year depreciation in here. But if your prior depreciation, they do not have accumulated depreciation, which is the prior depreciation. And so you need to put in that previous year, the prior depreciation plus the current year from the last year. So that way, to achieve the prior depreciation, you need to do is double click in here, you put in those numbers. So that will keep track it for the rest of these properties. Now, what this depreciation schedule going to go? I close it or escape it, and let me view it. So now in here, you're going to see how the depreciation is going to look like. Down here, under miscellaneous, the first one on the list is called depreciation. And this is what we write it down. You can move. Now, a lot of times you get a little bit confused. 275,000, you're supposed to divide by 27.5, and you should get a 10,000. But the system is going to give you less than 10,000. It's not long, especially when the first year, you normally like this, because they put in the places like that. But it's the second year, you normally go to the 10,000 in there. So don't worry. For example, the second year, do you see it? The next year depreciation, they get a 10,000. Always, so it's not long. It's right. That's what's supposed to. Whatever the system calculated like that is correct. Okay. And normally, basically, the first they do a discount on it. Okay, now, as you can see, go to Schedule E. I've been told the system to belong to this E1. Do you see it? Now it maps to here. So now we still have more information we need to put it in. Go to the data entry, far left corner, go back to rent. Now go to the second. Now we also need to answer those questions. Did the taxpayer make any payment in 2021 required to issue 1099? If they have any repair and any expenses, those are more than $600. Those requires 1099. I have to look at it. Now in here, they are 2,500. Those require 1099. If it's coming from one handyman. Assuming they are required and they also issue 1099 to the handyman. Okay. Now on the other hand, $500 of legal fee is not required. They're less than. So the insurance does not require the 1099. Okay. The tax and as well as this. So only need to require 1099 is to repair. The supply, even more than $600, does not require as well. So now we go back to the second tab under income and expenses, right? Okay, so now come back here, right here. So you see the far left column, there's a number there. Now, we first look at up here, there's anything talking about expenses? Oh, actually, they also say it's not quite, so therefore we need to go back to here. We got to say no, because they say they're not qualified. Okay, now come to here, legal professional, right there. You see, when you click the mouse in there, they highlight it, and you make sure you better to look at it. Okay, found it. It's good. So now you tap. It's not right. Tap, tap, tap. Right there. Stop there. You see it? Supply. Now the insurance is like here. Tax. I wish the California property tax like this, huh? That would be nice. California tax is huge. When you have that 370, that is almost 4,000. It's about 4,000 property tax in state of California. It's not going to be like this because it's 1.something%, depends on different county. So utility. So let me put in a more realistic number in here. So utility depends. If the tenant pay for it by themselves, you cannot deduct it because you don't pay for it. But if the owner pay for it, which in this situation, if the owner pay for this. So now, anything else? That's it. Now, there's no mortgage. There is no mortgage in this property. But most of the time, people have mortgage in this property. Let me see. Property, do we missing any mortgage interest? No, they're not. But normally, in this situation, when people bought the houses, have mortgage interest. Let's say they have the rental portion of it. The rental portion of it have mortgage, okay? And the mortgage, let's say 300,000. And if 300,000 mortgage, let's say if they're paying, depends on what percentage, 5 to 6%. Let's say if they're paying 6%. So this is the rent, the mortgage interest for the rental part of it. Now, remember, their mortgage interest may have become 36,000, but only the rental portion of it, we can count it. All this, we only count the rental portion of it. Okay. So now, if you input the full amount, and then you have to put the 50% in here, and then the property tax, for example, you can either go this way like this, and then just for the rental, And then for Schedule A, you have to go back to Schedule A to input it. But there's a shortcut, and here is the shortcut. You here, you put the 50% in here, and here you put 2 tunnels. So 1, you achieve the same, but you're going to delete this number. And delete. And the property tax, you put in, let's say the whole house is 8,000. Now what is going to happen? Here's what's going to happen. Look at this. Schedule E first. Inside the Schedule E, the system automatically take half of the mortgage interest, or I need to put in the light off. And then the property tax. The less of the number is to take the 100%. Do you see it? With the depreciation, and this house ends up have a little bit negative. Now, depends on their income. In this situation, this losses is offset of other income, like the unemployment income. So help them to decrease in the tax liability. Well, depends on your mortgage and property tax in this situation. If there's no mortgage interest, there will be a tax. Now let me delete the mortgage interest. Let's say in this situation, if there's no mortgage interest, it's going to pay off. There will be a net income. Net income will be increase in income, and then you add to the total income, and then you pay tax into it. Now, do you remember there's a question in here whether or not qualify the trade risk? What's the matter is, you see line 13 in here is empty. Now, what if they qualify? Let's say assume they qualify. There will be a deduction amount like there, minus another 20% of the net income. 20% of this $17,066. This new rule started at 2018. What if you did a tax return, like you use the TurboTax, you forget about this one, and you think you can go back to amend it, you get the refund. Now, I finished today's tax return. I'm ready for you to ask questions if you have any. You need to unmute yourself to ask questions. No questions? Let me ask you a question. Let me ask you. Now is 10 p.m. and 10:10 almost. You guys want me to continue to teach you one more classes that will last to about 10:30 to 10:40, or we end it right now?
Can we do next time?
Can you hear me? Well, I can hear you.
Yes, yes. Can we do next time?
You want to stop it right now? Okay. Okay.
Okay, because tomorrow I have to go to work morning.
Okay. Okay. That's a good that's a good request. Any other people?
Yeah, and also you said the rental doesn't qualify as a trade or business. So if you want to be qualified, you have to at least work for, you said how many are 200 hours?
250 hours.
250 hours.
In fact, the quote in here they say 750. They should qualify. Those two are conflict each other's. If they spend 750 hours, they should qualify. Okay,
Thank you.
no problem. So, per your request, we are going to end the training today, and we are going to start another training tomorrow at 10 o'clock. A great evening, and bye, everybody.
Thank you, Mr. Guan. I learned
Okay.
new things.
Okay,
Thank you.
Yeah.
bye,
Very
Bye.
clear. Thanks. Bye.
bye.
Bye.